Hey guys, what is up? I hope you're having an amazing day. In this video, we are talking about an interesting upcoming fintech IPO. Let me tell you, this company really intrigued me while I was doing some research and learning about their business. They have the potential for high growth these next few years, even months. In my opinion, I do see them being a huge disruptor in their sector because of the applied technology they use in their platform, which we will get into more. Not to mention, one quick fact, this company was founded by ex-Google employees. One of them was a VP of apps for Google. Interesting, right? Anyways, we will get more into detail on why I believe this company can be big. Real quick, if you can give this video an early thumbs up, subscribe, and turn on those post notifications, I would very much appreciate it. And remember you guys, I'm not a financial advisor. I'm not telling you how or where to invest your money, and you know how the rest of that goes. Now let's get started. The fintech startup facilitates loans between consumers and partner banks, an operation that attracted around $144 million in capital prior to its IPO. They have been performing very well financially, with including rapidly advancing revenues and recent profitable period. However, the company's revenue concentration could be a concern to some investors who recall what recently happened to Fastly's shares after losing a large customer. So this is something you're going to want to keep in mind. PitchBook data indicates that the company was last valued at $750 million thanks to its 2019 Series D worth $50 million. And if you don't know what a Series D is, it's basically a round of funding for startups, and I did some research on this and there's a few reasons why companies do this. The first reason is positive. They've discovered a new opportunity for expansion before going for an IPO, but just need another boost to get there. More companies are raising Series D rounds or even beyond to increase their value before going public. Alternatively, some companies want to stay private for longer than used to be common. Each of these are positive reasons to raise a Series D. The second reason is negative. The company hasn't hit the expectations laid out after raising their Series C round. This is called a down round, and it's when a company raises money a lower valuation than they raised in their previous round. And from the looks of it, it seems that Upstart's reason is the second positive reason, to increase their value before IPO. And while we're still speaking of funding rounds, I also want to point out that Mark Cuban is actually a major investor in this company. The startup counts Google Ventures, Khosla Ventures, former Google executive chairman Eric Schmidt, Mark Cuban, and Salesforce founder and CEO Mark Benioff. Sorry if I said that wrong, among its early investors. And as you can see right here, we are on Mark Cuban companies, and here is Upstart. So that's actually a really interesting fact behind the business. So who is Upstart? Upstart is a leading artificial intelligence lending platform designed to improve access to affordable credit while reducing the risk and cost of lending for our bank partners. By leveraging Upstart's AI platform, Upstart-powered banks can offer higher approval rates and experience lower loss rates, while simultaneously delivering the exceptional digital-first lending experience their customers demand. Upstart is one of the first to apply AI to the multi-trillion-dollar credit industry. Upstart goes beyond the FICO score, using non-conventional variables at scale to provide superior loan performance and improve consumers' access to credit. So we're here taking a look at some quick stats of Upstart. AI-powered lending. 15 billion cells of performance data. What this represents is the amount of data powering AI models, which includes model input variables and training data such as payment events. 622,079 loans transacted on the platform. 75% reduction in loss rates. 10 times increase in conversion rates since inception. 70% loans fully automated, and 3 of 4 last quarters GAAP profitable. Now, in their S1 statement, Upstart argues that the lending industry is broken in the US because of certain limitations within credit systems. And the way these limitations affect most of us is because first, they offer loans to many people who fail to pay them back, which is harmful to both consumers and lenders. Second, they decline to offer loans to people who would successfully pay them back if given the chance, also harmful to consumers and lenders. And finally, even those who repay their loans pay too much in interest because they subsidize borrowers who default. And this is where Upstart claims that their model is significantly more accurate than traditional lending models. The results provided from the access to credit comparison show that the tested Upstart model approves 27% more borrowers than the traditional model and yields 16% lower average APRs for approved loans. And as you can see this chart here, this is Upstart model versus traditional bank models. Upstart's model has 75% fewer defaults at same approval rate and 173% more approvals at same loss rate. So how will AI benefit and change lending? Upstart states that applying AI in lending will drastically fix the lending industry and improve it a whole lot. As you can see, it starts by vastly expanding the information used to inform a credit decision. Then it utilizes sophisticated machine learning algorithms that can tease out the relationships between hundreds or even thousands of variables. And finally, the system learns and improves on its own, optimizing in response to daily loan level repayment and delinquency data. Our own AI system is trained on almost 15 billion cells of performance data and predicts the specific likelihood of default or prepayment for each month of a loan term. And also, Upstart did some studies with some large US banks based on their platform. And these banks suggested that Upstart's model could improve up to 3 times the number of borrowers at the same loss rates as traditional models. Furthermore, improvements to our AI models have increased throughput of our borrower funnel by a factor of 10 since we began more than 8 years ago, driving long-term reductions in acquisition costs and improvements to our unit economics. These improvements led to our first profitable quarter in Q4 2019. All this sounds very, very innovative, you guys, and ever-changing in the lending industry. This information and the studies really took me and intrigued me. This is why I believe, in my opinion, that Upstart has high growth potential by far. After all, technology is the future, and technology is now being applied even more now in a lot of sectors, and the application of AI within this company will definitely boost the improvements and will be a game changer in the financial sector. Now, moving on, we're going to move on to their financials. I did say earlier that their finances have been up to par the past few years, and we will see that right now. Okay, so we're here on their income statement, and you can see right off the bat from year 2017 to year 2019 that their total revenue has increased each year, substantially actually. And this is always something you want to see in a company, especially if you're into high growth companies and investing into businesses just like this one. So you can see in 2017 they were at 57 million, jumped to 99 million in 2018. And then in the year of 2019, they are at 164 million in revenue. And a large portion of their revenue does come from their fees. Now, looking at the 9 months ended from September 30th of 2019 and 2020, their total revenue was 101 million to 146 million in 2020. Now, as for their total operating expenses, it looks like it has been increasing each year, which is fine by me because this is expected in any high growth company. They're going to be doing tons of marketing to really expand and put out there to consumers. And as you can see, most of their expenses is in sales and marketing. In 2017, it was at 33 million, 2018, 63 million, 2019, $93 million. And as for the 9 months ended of September 30th, 2019 and 2020, it did increase as well, their expenses, from 109 million 2019 to 145 million 2020. And again, a large portion of those expenses are in sales and marketing. And a second thing that you will see in any high growth company is their spending in engineering and product development. And as you can see, Upstart has increased a lot of their spending in this section from 11 million in 2019 to 24, almost 25 million in 2020. And this is also fine by me because high growth companies do want to, improve and be more innovative with their products. Now, as for their net loss and net income, they have had net losses throughout the years, but in 2020, they did have a net income of $4 million, almost $5 million. So they had great improvement in generating this income, which is a very, very good sign. Now, if we take a look at their balance sheet, Upstart has $53 million in cash, which is an increase from 2019 of $44 million. And their total assets as of 2020 are at $309 million. While their liabilities are at $194 million. So this is good that they have more assets than liabilities. Now, as for their key operating metrics, we're going to be looking at their number of loans transacted, the conversion rate, and percentage of loans fully automated. Now, throughout the years of 2017 to 2019, the number of loans transacted has increased from 70 million in 2017 to 114 million in 2018. And 215 million in 2019. And the conversion rate has been increasing each year also. In 2017, it was at 8.1% and jumped to 9.1% in 2018 to 13.1% in 2019. Now, for the percentage of loans fully automated, this has increased from 34% all the way to 66% in 2019. And if we take a look at the 9 months ended of September 30th, 2019 to 2020, number of loans transacted was 136 million in 2019 to 176 million in 2020. And you've seen a nice increase in the conversion rate as well, from 12.2% in 2019 to 14% in 2020, and a 5% increase from 64% to 69% for loans fully automated. So clearly, after going over their financials, they are indeed rapidly accelerating and have become profitable this year, which is a huge milestone, as profitability within a company is an A+. And you guys, each time I get more into detail with Upstart, the more it intrigues me, which is why I'm going to keep myself updated for when they list on the NASDAQ exchange. However, their price range, a share, and their shares to be issued is still to be announced, as well as their listing date, as I just mentioned. However, what we do know is that they will be trading under the ticker symbol UPST. If you're interested in this company like I am, you're definitely going to want to keep your eye out on this IPO. This company is going to be a huge game changer in the financial sector because of their application of AI technology and how innovative they are. And this is all my opinion, you guys. With that being said, that brings us towards the end of this video. I hope you all enjoyed this video as much as I did filming it for you all. Make sure to like and subscribe for more videos just like this one. And don't forget to turn on those post notifications to be notified every time I post a new video. Comment down below what you think about Upstart's IPO. I would like to know your thoughts. Thank you so much for watching. Till next time, you guys. Peace.